Good morning, everyone. Distinguished guests, ladies and gentlemen, welcome at Kickstart 2022, the conference day. Last night we already had a very good kickoff of the event. Large welcome drinks, dinner, and with over 500 people. Today we have a record attendance of 1,100 people, so from 25 countries. Very happy about that. We have a packed program today, and I'm also speaking to the people downstairs who can follow this session on the large screens and via the headsets. Due to COVID regulations, we had to have not the big hall that we used to have, but a smaller hall. But with the headsets and the screens, I hope everyone can view these sessions in the right and correct way. And all the sessions will be recorded, so if you have a packed program with networking, you can also opt to go for networking and then watch the insights later. And the panels are really of top level this year, better than before. So very happy about that. When we started 5 years ago, this is our 5th show, we thought, let's have a C-level panel. And now we have so many C-level people that we need 2 panels for that to fit them all. So very happy about that, and very looking forward to that. Also, the afternoon program is packed with very interesting sessions. These sessions will be held on this floor, on the 2nd floor, and will be in the hall, so not on the screens, but you can attend them physically. Also, these sessions will be recorded and will be made public on a later date. The program is in your badge for the whole day, but also in the Outlook report and also on the screens below on the 1st floor. So there you can find all the information on the event. Next to that, we also have the networking app, the same networking app that we had 5 years ago, but it's working really well. So we have also a record number of pre-scheduled meetings. If you haven't scheduled meetings, do it now. There are so many people on the event, and yeah, make use of it. This is the time where we all see each other in person, and this is the moment to connect and broaden your network. Online it's a little bit difficult. Now it's the time to do so. Yeah, thank you very much for attending. It's been a great pleasure yesterday also to see everybody back in persons that we only saw on the screen for the last 2 years, and they're actually live people, because this industry is all about tech, it's all about equipment, data, and a lot of acronyms, but it's all about the people. So I'm very happy that we can all now come together and see each other again. So I hope you have a really wonderful day. Back to the program that will start now, and we will start with the keynote of CBRE. 5 years ago, we thought, where can we start? Who is best to start the conference? And we thought, well, that must be CBRE with their annual insights and quarterly insights. So we thought, let's start with them, and they happily agreed to work with us, and they're still doing so. I'm very happy that Alex Cousins is here today. Unfortunately, the previous speaker had COVID, so couldn't travel to the Netherlands. But Alex is doing his presentation, and he's associate director of CBRE. And I would like to welcome you on stage and give you the floor. Enjoy.
Hi, morning everyone, and thank you for that introduction. It was actually 2 people that couldn't make it, so I thought I dodged a bullet, but obviously not. Yeah, thank you for coming, and if you're anything like me, it was actually quite a challenge to get to Amsterdam, thanks to Brexit, but eventually made it, and it's great to see some familiar faces. Also, thank you very much for Kickstart for inviting us again. And it must have been particularly difficult to run the conference over the past couple of years online, but you've come through the other side, and I hope everyone agrees in this room that it's a fantastic opportunity to meet people, to network, and luckily see people face to face. A brief introduction. So I'm Alex Cousins. I'm a director, although it doesn't say it there, in CBRE's capital markets team covering the whole of Europe, and I'm delighted to present to you today. What I'll be doing is focusing a little bit on 2021 and actually how that sculpted the trends and predictions for 2022. So here you have it. So we'll look really briefly at 2020, and this is the supply that came into the flat markets of 173 megawatts. As we move forward into 2021, as you can see, 2.3 times over doubled the supply. And when we look at all of the metrics, not just supply, but also demand for FLAP, they're pretty untouchable. And it's definitely a sector that I'm very proud to say that I'm part of. When we look at the supply of nearly 400 megawatts, a large part of that is because of the COVID incidences, we call it, where PC of development sites came forward, instead of 2020, came forward in 2021. But without that, and withstanding that, it's still a fantastic year, and it took the whole supply of FLAP to 2.2 gigawatts as a total. But like I said, it's not just about the supply in the market, it's also about the demand. And in 2021, we saw 380 megawatts of take-up, and that was a record year. So pretty much matching the supply that came to market. And what did that mean? Well, it meant that the vacancy rates across Europe dropped significantly. If I was standing here in 2019 or 2020, we'd be saying somewhere between 25, maybe slightly lower as a vacancy rate. Last year, it dropped down to 18. And a big part of that is the Frankfurt market, which went sub 10%, and is currently running at a vacancy level of 9%. As you can see from the middle diagram there, London still remains to be the largest market in FLAP, running at about 825 megawatts, closely followed by Frankfurt at 600, Amsterdam at 500, and Paris at 320. So before I come into the trends and predictions for 2022, I just thought I'd highlight some of the headlines that I'm sure you've all read over the past 18 months. And whether this is challenges that we see on power or land or supply chain or whatever it might be, I think there's one thing that's clear in the sector is that we've overcome a lot of these challenges. And that we don't see in 2022 particularly a slowdown, but we do see some adjustments. And if we look at Frankfurt again, some simple supply versus demand imbalances is leading to colo pricing increasing. Not only that, but if you look at the location and land values in West London, they're near £2,800 per square metre. A couple of years ago, this was sub 2,000. And what this is also doing is, like I say, an adjustment is that the people that we're speaking to at CBRE are looking slightly outside the main hubs in order to still be able to deliver the demand that they are seeing. So is growth here to stay? Let's have a quick look. I think the simple answer is yes. Supply is still trying to keep up with demand. Supply is still trying to stay one step ahead of demand. It's still set to reach record highs, especially in the flat markets. This year, we expect to see 356 megawatts come to market, which is the second largest supply that we've seen. And we're also going to see a demand of 300 megawatts. But I'll put a little caveat in here. We as CBRE say this year in, year out, and for the past 5 years, and I think we were 100% wrong so far. I hate to admit that, but the market's growing at such quick speeds. And we've put 300 here, but I'd love to be able to say in 12 months' time that we exceeded that, and I think, in my personal view, is that we will. However, what that's doing is that is causing constraints, and that's causing constraints that are leading people to go to Tier 2 and Tier 3 markets, and we'll come on to that a little bit later in this presentation. And as you can see right at the bottom, with the new supply, we'll be at 2.6 megawatts. And again, I'm kind of repeating myself, records are being broken year in, year out. The other thing that we're going to see in 2022, and this is across the whole of FLAP, is that the industrial and logistics markets are heating up, and they're real challenges for, especially on buying and acquiring land. And we don't see that stopping, especially in the FLAP markets. But again, I think that the operators will overcome this, whether it's moving to new locations or whether it's just digging a bit deeper in their pockets. We'll be able to find a solution. In summary, I think it's going to be a really strong year, and even though there are challenges, we predict that we'll overcome all of these and the growth story will continue. It would be amiss of me not to talk a little bit about yields, and this is where I see a few people dropping off. But from a capital markets point of view, we again think there's going to be yield compression. If I was standing in 2019, prime powered triple net DCs would be around 4.5% across the flat markets. We're now probably at 3.5%, maybe slightly keener on certain products. And the reason for that is that the investor demand is increasing. We're seeing more competitive processes for acquiring income-producing assets. And even though we had an absolute record year in the capital markets sphere of $1.1 billion, I hope that we achieve in addition to that this year. So supply, and why is it growing? Well, quite frankly, it's to keep up with cloud. And there's 5 points on here. I'm not going to go through all of them, but I'm going to pick out a couple, one of which is the campus growth. And quite frankly, the operators that have got hyperscalers or cloud providers within their campus, they have to have the ability to increase that supply. And by having a campus with modular design, connectivity, de-risking the project through staged deployment of capital is the best of both worlds for everyone. The next thing I'd like to talk about is the higher density builds. Long gone are the days when we're talking about 3 or 4 kilowatt racks. We at CBRE, especially our occupier services team, are speaking to people that want 35, 50, and I'm sure some of you in the room are going higher than that. And this is all to obviously future-proof over the next 5, 10 years. And the final thing, and I know this presentation is mostly about FLAP, but I just want to pick up on the data center hubs and the new and emerging markets, because yes, there's supply across FLAP, of course, but there's also going to be a lot more supply coming in through the Tier 2 and Tier 3 markets. And if we just look at the recent AWS announcement of 32 new hubs, 12 of which were in Europe and 11 of which were outside the FLAP markets. So it just highlights that although supply is critical within FLAP, it's also important across the whole of Europe. And cloud, what can I say? It's certainly driving the whole of the sector. And again, I'm using the analogy of going back a couple of years. If we were standing here 2019, 2020, we'd be saying the rough take-up would be about 80%. Now, today, or last year, we saw 87% of cloud take-up. And one of the biggest reasons for that is the deployment sizes that we're seeing. I'm thinking back to a 50 megawatt deployment in Q3 in Amsterdam last year. And when we're talking about trends and predictions, what we anticipate is that these are only going to get bigger and more frequent, not go backwards. And the key thing to recognize is it's not just hyperscale. Enterprise customers are also demanding more. They're also taking more space for reasons of cost, quality, reliability. I mean, you name it, they're certainly pushing the cloud operators to take additional supply. However, although organizations are looking to make that digital transformation, there are some restraints and some barriers. And as we can see at the top of the screen here, whether this is legacy systems, which is stopping them migrate or making it very difficult to do that, whether it's legacy people, it says talent there, I'll change that slightly, that either for job security, trust, whatever it might be, don't want to migrate their systems into colo. And then culture, and again, speaking to our occupier services team at CBRE, I've heard it a lot that the if it's not broke, don't fix it approach. And a lot of companies are very risk adverse and they're willing to pay slightly more, they're willing to have less flexibility just to make sure that the critical infrastructure remains intact. So a way around this is to have a more of a pay-as-you-use model. And again, we're seeing this a lot more, we're seeing this as a trend going forward, where they're using clouds, they're using on-ramp to clouds, whatever it might be, to be able to use additional services and provide them with flexibility, whether that's using applications or whether that is taking less IT capacity. It's all becoming a lot more important in order to meet the changes in market demand, which we're seeing, which is speeding up especially. So I guess I'm going to come a little bit back full circle now, and just give a bit of an overview and a summary. So the cloud and hyperscale market is still a dominant sector of take-up. But don't forget the enterprise demand either. And going forward, as I said earlier in the presentation, we're going to see 300 megawatts of take-up with circa 356 megawatts of supply. Again, that is the second highest that we've seen in the FLAP markets. FLAP is also likely to exceed 2.6 gigawatts. Again, that's going to be a record. But there's still factors which are causing obstacles, and like whether that's planning, power, land, etc. It's all important. London is still set to be the biggest market in FLAP at 825 megawatts. But the key thing to note on the bottom of this screen is that all of the graphs are going up. The trends are to take more space, not less. There is more power required, not less. And the one key thing I want to pick up on this slide is it's not just FLAP. So we've picked out Stockholm and Madrid, where we're getting lots and lots of customers coming to us, asking us for research reports or colo rents, or whatever it might be. And you can see the smaller bars there. And if you look all the way on the far right in 2022, I think they're both at circa 100 megawatts, and the combined is 207. And that's impressive because in 2019, they've grown by 5 times. So as a percentage change, it's huge, especially in comparison to the FLAP markets. However, from an absolute basis, the FLAP markets are still growing exponentially. And just kind of building on that, another market that we're seeing a lot of demand for is Norway, and specifically Oslo. But again, it's all about looking at where else can we deploy. There's challenges in FLAP. We need to be closer to end consumers, whatever it might be. And here, I haven't said it yet, but sustainability, I thought I'd get away with it, is a key driver for Norway, where people are looking to get low-cost renewable energy, lots of land, positive regulation. But even, and just to put it in comparison, if you compare Stockholm, Madrid, and Norway, you're still below the total capacity in Paris, which is 320 megawatts. So I guess in summary, I'm really privileged to be standing here, working in a sector that all of the metrics are going up, all of the trends are positive, there's lots and lots of growth, there's lots and lots of opportunities, and I guess that's why everyone's sitting here as well. So I'll stop speaking at this point, and I'll pass over to Jonathan Atkin from RBC. I'm sure he'll do a much better job at introducing himself than I will. But thank you very much for your time. Thanks for listening to CBRE's views, and please catch me for a coffee afterwards.